Hey everyone, welcome back. We're doing a deep dive today into Chicago commercial real estate investing.
Oh,
We're going to be focusing on a concept called the buy box.
all right.
And this
Yeah.
information comes from an article by Michael Linton
Hmm?
of the Chicago Deal Flow team. You can find his work at chicagodealflow.com.
Okay, great.
So, if you're trying to make sense of the Chicago real estate scene, it's a huge market.
Yeah.
It's diverse and it's always changing, right? So a buy box can really help you kind of cut through all that noise.
Absolutely.
It's like a personalized filter to help you pinpoint properties that match your goals.
Yeah, it's like having a roadmap, right?
Yeah.
Instead of wandering aimlessly, you're following a clear path that leads you to the treasure, so to speak.
Exactly, and that's what Michael emphasizes in his article.
Yeah.
So let's unpack this buy box.
Okay.
What are the key components that make it so powerful?
Well, Michael breaks it down into several essential elements, each acting as a filter.
Okay.
First and foremost, you've got location. Are you eyeing the bustling loop in downtown Chicago, or perhaps the O'Hare submarket with its transportation hub and business activity?
Uh-huh.
Maybe you're thinking about the stability of established suburbs like Schaumburg or Naperville.
Yeah.
That's the first big decision.
It's almost like choosing your adventure, right? You decide where you want to play in the Chicago real estate game.
Yeah, exactly.
So once you got your location locked in, what's the next filter in this buy box system?
Next, you've got to consider property type.
Okay.
Do you want to invest in office spaces, retail centers, industrial warehouses, or multifamily apartment buildings? Each one comes with its own unique set of opportunities and risks, and your choice will heavily depend on your investment strategy and appetite for risk.
Okay, so we've got location and property type as our first two filters.
Right,
That already narrows things down quite a bit.
it does.
What else does Michael suggest we consider when building our buy box?
He then talks about size. This could refer to square footage for some properties or the number of units in a multifamily building.
Right.
You need to figure out what scale aligns with your investment goals and your financial capacity.
Yeah.
It's about finding that sweet spot, isn't it?
Yeah.
Not biting off more than you can chew, but also not limiting yourself unnecessarily.
That's a point that often gets overlooked.
Yeah.
People get so caught up in the excitement of a potential deal that they forget to consider if it actually fits their capacity.
Right.
But Michael's right size is a crucial part of the buy box.
Absolutely.
Speaking of fitting things in, what about price range?
Yeah,
That's got to be a big factor.
absolutely. Michael's very clear about this.
Okay.
Setting a realistic budget from the get-go is critical.
Mm-hmm.
This ensures you're only looking at properties you can actually afford and helps you avoid wasting time on deals that are outside your financial reach.
Right.
He even suggests working with a lender to get pre-approved for a loan.
Oh, yeah.
This gives you a clearer picture of what you can realistically invest in.
That's solid advice.
Yeah.
So we've got location, property, type size, and price range.
Uh-huh.
What's next on Michael's buy box checklist?
Now we get to the heart of the investment.
Okay.
Expected return on investment, or ROI.
Right.
This is where you calculate your potential profits.
Okay.
Michael talks about using metrics like cap rate, which helps you assess a property's income potential relative to its market value.
Okay, I've heard the term cap rate thrown around before.
Yeah.
But to be honest, I'm not entirely sure I understand it.
Sure.
Could you break it down for us a bit?
Sure. Think of cap rate as a quick snapshot of a property's potential profitability.
Okay.
It's a simple ratio. Net operating income divided by the property's market value. So a property with a higher cap rate might signal a better return on your investment, but there's a nuance to it.
I see. So it's not just about finding the highest cap rate possible, is it? What's the nuance Michael highlights?
Exactly. It's about understanding the context. Michael emphasizes that a higher cap rate in an up-and-coming area might be a better investment than a lower cap rate property in a saturated market.
Okay.
It's all about weighing potential risks and rewards.
Yeah.
Let's say you're comparing two properties.
Okay.
One is a sleek office building in the Loop with a 5% cap rate, and the other is a retail space in a revitalized neighborhood like Pilsen with a 7% cap rate. While the Pilsen property might seem more attractive with its higher cap rate, you have to consider factors like tenant stability and future growth potential in both areas.
That makes a lot of sense.
Yeah.
So cap rate is an important piece of the puzzle, but you need to look at the bigger picture as well.
Precisely. It's just one data point among many.
What other data points does Michael suggest considering for our buy box?
He emphasizes the importance of the property's age and condition.
Okay.
This is a huge factor because
Yeah.
it directly impacts your renovation costs and ultimately your future profits.
Right.
A newly constructed property might require minimal upfront investment, but you're paying a premium for that newness.
Yeah.
On the other hand, a property that needs a bit of love might be a bargain, but you'll need to factor in those renovation costs.
It's like choosing between a move-in ready house and a fixer-upper.
Yeah,
One is more convenient, but the other might have hidden potential and maybe a few hidden surprises.
that's a great analogy.
Yeah.
And finally, Michael stresses the significance of the tenant profile.
Okay.
This is particularly crucial for commercial properties.
Mm-hmm.
Who are you hoping to attract? What kind of businesses or tenants do you envision occupying the space?
Yeah.
Do you prefer long-term leases or a more dynamic mix of tenants?
Right.
All these factors can impact the stability and profitability of your investment.
It's like casting for a play, isn't it? You want the right actors to bring the story to life, and in this case, the story is the success of your investment.
Exactly. You want tenants who are a good fit for the property, the neighborhood, and your overall investment goals.
So to recap, we've got location, property type, size, price range, expected return on investment, age and condition, and tenant profile.
Yes,
That's quite a comprehensive set of filters for our buy box.
it is. And the beauty of Michael's approach is that it's not a one-size-fits-all formula.
Right.
You can tailor these components to your individual needs and goals,
Yeah,
creating a buy box that truly reflects your unique investment strategy.
I love that.
Yeah.
So how would different types of investors approach this buy box?
Yeah.
Does Michael offer any specific examples in his article?
He does. He talks about institutional investors, for example.
Okay.
These are the big players in the game, like pension funds or insurance companies.
Right.
And they often have a very specific buy box focused on low-risk, high-return properties in prime Chicago locations.
Mm-hmm.
Think of those iconic Class A office towers in the Loop.
Yeah.
They're looking for stability and consistent income streams.
Got it. Big money, prime real estate, playing it safe.
Exactly.
What about investors who are a little more adventurous, maybe looking for those hidden gems with untapped potential?
Those would be the value-add investors.
Yeah.
Michael describes them as the folks who aren't afraid to roll up their sleeves and put in some work.
Yeah.
Their buy box might target properties in transitioning neighborhoods,
Interesting.
places that are on the cusp of revitalization.
So where others might see challenges, they see opportunity.
Exactly.
Does Michael give any clues about what signs value-add investors look for in these transitioning neighborhoods?
He does. He points out a few key things.
Okay.
First, they look for areas with strong underlying fundamentals,
Okay.
like good transportation links, access to amenities, and a growing population.
Mm-hmm.
They're also interested in neighborhoods where there's a catalyst for change,
Okay.
maybe a new development project or a shift in demographics.
It's like they're betting on the future of a neighborhood.
Right, exactly. They're looking for areas where they can buy a property at a relatively lower price, add value through renovations or repositioning, and then capitalize on the rising tide as the neighborhood improves.
I see.
Michael uses the example of Logan Square,
Okay.
which was once considered a bit rough around the edges,
Yeah,
but has experienced significant gentrification in recent years.
that's right.
Value-add investors who got in early have reaped substantial rewards.
That's fascinating. So institutional investors are all about stability,
Right.
and value-add investors are more about identifying those diamonds in the rough.
Yeah.
What about someone just starting out in the real estate game?
Sure.
What kind of buy box would Michael recommend for a first-time investor?
For those dipping their toes into the market, Michael suggests starting smaller and focusing on stability.
Okay.
He recommends considering properties in well-established suburbs,
Okay.
places with a solid track record of steady growth and lower entry costs. Think about areas like Arlington Heights or Naperville.
Right.
These suburbs offer a more manageable scale for first-time investors
Yeah.
and tend to be less volatile than the downtown market.
So it's about minimizing risk and building confidence before taking on bigger challenges.
Exactly.
Does Michael mention any other types of investors and how they approach their buy box?
He touches upon REITs or real estate investment trusts.
Okay.
REITs are unique because they're looking for diversification.
Okay.
They pool money from multiple investors and spread their investments across various property types and submarkets.
So they're not putting all their eggs in one basket. They're casting a wider net to manage risk.
Exactly.
Does this mean their buy box is less specific?
Not necessarily.
Wow.
While their buy box might be broader geographically, they still have specific criteria they use to evaluate potential investments.
Right.
They look at factors like occupancy rates, lease terms, market trends, and overall economic conditions. They want properties that will generate consistent income and appreciate in value over time.
Right.
Their strategy is more about managing a portfolio of assets rather than betting on a single property.
That makes a lot of sense. Now, one thing that really stood out to me in Michael's article was his emphasis on adapting the buy box to market trends.
Yes.
Why is that so crucial, especially in a dynamic market like Chicago?
It's all about staying ahead of the curve.
Okay.
Chicago's real estate market is constantly evolving. New neighborhoods emerge, suburban dynamics shift, and property preferences change.
Right.
If you're stuck with a rigid buy box, you might miss out on incredible opportunities.
So it's not just about setting a buy box and forgetting it. It's about being flexible, informed, and ready to adjust.
Exactly.
Does Michael give any specific examples of how market trends might impact a buy box?
He does. Remember how we talked about the rise of remote work earlier?
Oh, yeah.
Well, Michael points out how that shift has impacted the office market.
Okay.
Pre-pandemic Class A office space in the Loop was highly sought after.
Right.
But with more people working from home, demand has shifted.
Yeah.
Smart investors have adapted their buy boxes to include properties in emerging neighborhoods like the West Loop or Fulton Market. Okay.
Where there's a growing demand for flexible, collaborative workspaces.
It's like a game of chess.
Yeah.
You have to anticipate your opponent's moves and adjust your strategy accordingly.
Exactly.
What are some other market trends Michael highlights?
He talks about the changing demographics and lifestyles in the suburbs.
Okay.
With more millennials starting families and prioritizing affordability and space, suburbs like Schaumburg and Naperville are seeing a surge in popularity.
Okay.
They offer good schools, parks, and a more relaxed lifestyle, which appeals to a growing segment of the population.
So it's not just about the physical property anymore. It's about understanding the needs and desires of the people who will be living or working in these spaces.
Exactly. And Michael also emphasizes the impact of e-commerce on the industrial property market. With online shopping booming, there's a huge demand for warehouses and distribution centers.
Right.
Areas like Elk Grove Village, with its access to major highways and O'Hare Airport, have become hotspots for industrial real estate investment. So even if you had a perfectly crafted buy box a few years ago, you might need to tweak it today to stay relevant.
That's right.
What other factors might necessitate a buy box adjustment?
Economic conditions are a big one.
Okay.
Interest rates, inflation, and overall market sentiment can all impact your investment strategy.
Yeah.
For example, if interest rates rise, you might need to adjust your price range downward to ensure you can secure financing at a reasonable cost.
Makes sense.
Michael stresses the importance of staying informed about economic indicators and incorporating that knowledge into your buy box.
It's like you're constantly fine-tuning your instrument to make sure it's in harmony with the orchestra, so to speak.
Yeah.
You need to be adaptable and responsive to the ever-changing rhythm of the market.
That's a great analogy. And Michael also highlights the importance of having a clear exit strategy.
Oh, okay.
How long do you plan to hold the property? What are your target returns?
Right.
Thinking about your exit strategy up front can help you make more informed decisions when crafting your buy box.
It's like having a plan for the entire journey, not just the starting point.
Exactly.
You know what's fascinating to me is how the buy box isn't just a tool for finding properties.
Right.
It's also a way to understand your own investment strategy better.
That's a fantastic point. It forces you to define your goals, assess your risk tolerance, and articulate what you're truly looking for in an investment.
Like a self-reflection exercise for investors, isn't it?
Yeah.
It helps you clarify your values and priorities and make decisions that align with those values.
Exactly. And that self-awareness is essential for making sound investment choices and achieving long-term success.
I'm really starting to appreciate the depth of Michael's approach.
Yeah.
It's not just about crunching numbers.
Right.
It's about combining those numbers with a deep understanding of the market, your own goals, and the human element of real estate.
He's really advocating for a holistic approach to investing, isn't he?
Yeah.
It's not just about buying a building. It's about investing in a community and a vision for the future.
Exactly.
Yeah.
It's about seeing beyond the bricks and mortar and recognizing the potential for growth, transformation, and positive impact.
Absolutely.
You know, this conversation has really inspired me to revisit my own investment strategy.
Yeah.
What about you? What's resonating with you the most from Michael's insights?
I think what's striking me is Michael's emphasis on continuous learning and adaptation.
Okay.
The real estate market is constantly changing.
Right.
And he reminds us that success depends on staying informed, being flexible, and always seeking to expand our knowledge.
He's like a seasoned guide sharing his wisdom and encouraging us to embark on our own real estate adventures, equipped with the knowledge and tools to navigate the terrain.
And remember, if you're looking for a trusted guide in the Chicago real estate market, Michael Linton and his team at chicagodealflow.com are a fantastic resource.
Absolutely.
They have the experience, the expertise, and the passion to help you achieve your real estate goals.
Absolutely. So be sure to check out their website and connect with them if you're looking for expert advice and support.
Yes.
Now, as we wrap up this deep dive into the world of Chicago commercial real estate and the power of the buy box,
Okay.
let's leave our listeners with a final thought.
Right.
We've talked a lot about the buy box as a tool for investors, but how can this concept be applied to other aspects of the Chicago real estate market?
That's an interesting question. You know, the principles behind the buy box are incredibly versatile.
Yeah.
Let's say you're a business owner
Okay.
looking for the perfect storefront in Chicago.
Mm-hmm.
You could absolutely use a buy box approach to narrow down your options.
So instead of focusing on investment returns, they'd be looking at factors that drive business success.
Right.
What kind of things would be important in a buy box for a business owner?
Well, location would still be paramount.
Right.
They'd need to consider foot traffic visibility, proximity to their target market, and the overall vibe of the neighborhood.
Okay.
Think about a trendy boutique.
Okay.
They wouldn't want to be tucked away in a quiet residential street. They'd thrive in a bustling area with lots of foot traffic like Wicker Park or Lincoln Square.
Yeah, it's like choosing the right stage for your performance.
Right.
You want the setting to enhance your act, not detract from it.
Exactly. They'd also consider the property type and size.
Mm-hmm.
Does their business need a sprawling space with multiple levels, or would a cozy storefront suffice?
Right.
Do they require specific features like high ceilings or ample storage space?
Yeah.
These are all things they define in their buy box.
And just like an investor, they need to set a budget and stick to it.
Absolutely.
Finding the right space is great, but it needs to be financially feasible.
Right. They'd also want to think about their ideal customer and the type of experience they want to create.
Okay.
Are they aiming for a high-end exclusive feel?
Yeah.
Or a more casual community-driven vibe?
Right.
The neighborhood and property type should reflect their brand identity and target audience.
I'm starting to see how this buy box concept can be applied to so many different scenarios. It's really about taking a strategic, goal-oriented approach to real estate decisions, whether you're buying, selling, or leasing.
Precisely. And it's not just for businesses either.
Oh, okay.
Imagine you're searching for an apartment in Chicago.
Okay.
You could create a buy box to outline your must-haves and deal breakers.
Right.
Do you need a pet-friendly building? In-unit laundry? A balcony with a view?
Yeah, those are all good ones.
How about proximity to public transportation or a certain school district?
Those are important too.
By defining your criteria up front, you can streamline your search and focus on properties that truly meet your needs.
It's about taking control of the process and making informed choices.
Exactly.
I love how Michael's insights have opened up this whole new way of thinking about real estate.
Me too.
It's not just about transactions. It's about strategy, self-awareness, and finding the right fit.
He's given us a valuable framework for navigating the complex world of Chicago real estate, hasn't he?
Yeah.
It's about empowering individuals and businesses to make smart decisions that align with their goals.
Well said. Michael Linton has provided us with so much to think about today.
I agree.
This deep dive into the buy box has been truly eye-opening.
It has. It's highlighted the importance of strategic thinking, adaptability, and a deep understanding of both the market and yourself.
And remember, if you're looking for expert guidance on navigating the Chicago real estate market, Michael Linton and his team at chicagodealflow.com are a fantastic resource.
Absolutely.
Be sure to check out their website for more insightful articles and resources.
They're a wealth of knowledge and experience, and they're passionate about helping people achieve their real estate goals in the Chicago market.
So as we wrap up this episode, I want to encourage our listeners to take some time to define their own buy boxes.
Great idea.
Whether you're an investor, a business owner, or simply someone looking to make a smart real estate decision in Chicago, having that clarity will empower you to navigate this dynamic market with confidence and success.
And remember, the buy box is not a static document. Be prepared to adapt and refine it as the market evolves and your goals change.
Great advice.
Yeah.
Until next time, happy investing and good luck with all your real estate endeavors in the Windy City.